As corporate executives air out their economic perspectives, we're taking a look at earnings and what earnings are signaling about the economy. Here to discuss this and more, we've got GLOBALT Investment Senior Portfolio Manager Thomas Martin. Thomas, great to have you here with us this morning, and thanks for taking the time here. If there's an overarching theme that you're able to kind of draw a through line on for all of the earnings that have come forward early this season, is there one that kind of rings out or resounds for you?
Yes. Well, thank you guys for having me on this morning. And to answer your question, the resounding theme is that we're still very much in early stages of this normalization process. And this earnings season, this first quarter, is really showing that. We're getting a lot of mixed indications from the various companies that are reporting, even ones that are in the same industry. And so there's a lot that needs to keep on going on. And I'm afraid we're going to have to wait for another quarter or two before we really get definitive information one way or the other.
We were just showing some of the mixed signals via the reports that you were talking about, right? That we had the likes of a J.B. Hunt, which is negative, which doesn't, if you think of trucking as an economic bellwether, well, that's not, or logistics, that's not necessarily a good thing. The airlines and home builders perhaps more on the consumer side. So is there anything, even though it is a murky picture, are there any things that you have sort of pulled out of these earnings season as themes that you want to pay attention to?
Well, we definitely want to be paying attention to the things like Procter & Gamble that you highlighted earlier. And this difference between pricing, the ability to get pricing, and the ability to sell units. And you highlighted it perfectly, is that when inflation is being fought by the Fed and the central banks, and we all want it to come down, companies that are relying on pricing but are not getting that unit growth, that could end up being a problem going forward. So for this quarter that Procter & Gamble reported, it looks as though it's a mild decline in units, and they're still getting pricing. But as that dynamic changes, and if it becomes more negative, then these companies may be forced to continue to lay off more employees, and then that will raise the unemployment rate and make it more difficult for the consumer to remain strong.
Do you think we're due this earnings season for another guidance reset?
It doesn't appear that we are so far. It's all idiosyncratic. And so some companies are resetting earnings to a fairly large degree. But it's interesting, particularly, say, in the semiconductor area, those expectations, even though there's a reset, are being taken in stride. So the market and investors are looking for that bottom, and we're really just in the beginning stages of the downside.
And so if that's the case, Thomas, right, and all of these signals are relatively murky, we don't know if a recession is going to happen, we don't know how severe it's going to be. From a strategic perspective, do you just discard sort of top-down analysis and just try to pick good companies?
That's a great question. And it always makes sense to pick good companies that have good fundamentals and good managements. And more so in very difficult times and trying times. You really get to see those managements that are doing well at making the decisions. And so especially in this time, it makes a lot of sense to go towards quality companies that have growth that will be less impacted in a downturn. So less cyclical, less beta type companies, less ones where you're making a bet that things have to go right. So quality for sure in this environment.
Where does ESG sit within a quality evaluation, perhaps? Because this is something that we've heard about from everyone from the oil and gas companies that are trying to say, hey, yeah, we'll put these targets out there, which, in the meantime, they're going to try and maintain as best they can the profits that they are getting. But then even more so, Larry Fink, Jamie Dimon, these large financial institution CEOs that are saying climate risk is not just a societal risk, but it also is an investment risk as well if you are not putting that into your portfolio somehow. How are you evaluating ESG in this environment?
Right. Well, in our fund, the way we look at ESG is not so much on a values-based or an activist-based or an agenda-based type of investment profile. And within the last year, certainly you've seen the kind of the battleground and the backlash really start to bring to the fore in the ESG area. And I think it's important to note that really these metrics are new and they're trying to measure risks in the portfolio at base. So once you get beyond a lot of the hype and the positioning, it is how are these companies thinking about these risks going forward? What can the impact be on their earnings and on their end markets and on their employees? And that's what we're trying to find measurements of and then incorporate in the portfolio. And a lot of it comes down to a better management, better awareness, and better quality in the companies. So at the margin, you're looking for those kinds of things as companies report these metrics.
Thomas, thank you. Thomas Martin, GLOBALT Investment Senior Portfolio Manager. Appreciate you spending some time with us this morning.
Great. Thanks very much. Thanks for having me on.